Well, I think we have to look company by company, most definitely. And today we're going to hear from Apple, and that's a company that we really question as far as what we're going to see going forward. In comparison, I would say, with some of the other names that we really do like. So we're also going to hear from Amazon. So I would say that it certainly is company by company. It's still hard to tell in the AI race who are going to be the necessary winners. So certainly having some diversification there is important. But I would say company by company, looking at each one.
Lorraine, how does fixed income fit into your discussions with your clients? I mean, you can sit in a 2-year treasury and get darn near 4%, or if you want to take some credit risk and get more than that. How about fixed income these days?
We certainly, when we look at our portfolios and we look at even a balanced portfolio, has done very well year to date because we're still getting a nice yield on our fixed income at the same time while we've seen the equity markets do quite well year to date. So we've locked in with our fixed income these long-term coupons that we're able to collect. And so we are of the mindset that quality is important. The extra amount that we would get by going into high yield just isn't worth it for us. We're keeping our credit quality high and enjoying just collecting that coupon.
Well, let's talk about rates here. So we have, of course, the Fed that kept rates unchanged yesterday. And we have some traders who are kind of pricing in a potential September rate cut. Is that something in your view as well? And how are you thinking about that when it comes to investing?
Yeah, I think there's no doubt that we're going to see rate cuts this year. I think it's the question of how many. And so our baseline is 2 cuts this year and 3 cuts next year. So I think we have to take the whole picture together. While we don't know how many cuts we're going to see this year, we're on the trend of the rate cut cycle, despite Powell's comment about, not raising rates and spooking the markets a little bit.
Yep.
We're going to see rate cuts. So
Yep.
I think that it's just a matter of how many.
Lorraine, thank you so much for joining us. Really appreciate getting some of your thoughts and perspectives. Lorraine Gilbert, she's the CEO of WealthWise Financial out there in Irvine, California. As we close out here just this segment, we got the S&P up 43 points at 0.7%. Not bad. This is Bloomberg. Good morning.
sad. Look at things different, see the bigger picture.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. You can learn more at ibkr.com/RIA. All right, so you have 7 of the 11 major industry groups in the S&P 500 higher right now. You want to guess what they are? Communication services and information technology. Tech, the leaders right now. Meta Platforms in there. That's at a record high. Meta is taking advantage of its advertising business. They're stepping up spending and investing in artificial intelligence. Microsoft, now earlier we told you they touched a market cap of $4 billion, coming down just a bit from that. They delivered an encouraging update on the Azure cloud computing platform. That's the centerpiece of the company's AI efforts there. S&P 500, 40 points higher. That's up 0.6%. It's a record 6403 if it holds up through the close. Dow Jones Industrial average up 95 points. The NASDAQ 100 right now up 136 points. And that is a rise of 0.6%. That's good for a record, too. After the economic data today, right now the 2-year down a basis point, 392. The benchmark 10-year, 2 basis points lower, 434. Let me do the yen for you because that's kind of an eye popper. 150.49, so that's a weakening against the dollar, down about 0.6%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Nora and Paul.
All right, John Tucker, thank you so much. We appreciate that. Norma, Linda, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. March 13th, 1986, Goldman Sachs took a little technology company called Microsoft public at a split adjusted price of 7 cents per share. As John Tucker just told you, stock's trading at $536 a share today. You go do the math. That's a win. Anurag Rana, he's been there almost the whole time, technology analyst at Bloomberg Intelligence. Anurag, what's Microsoft doing so well that it's setting all-time highs seemingly every day? What did you take away from their earnings last night?
I think the biggest takeaway for us was that their AI strategy is, probably shining better than any other large public company out right now. They invested early in OpenAI, and a lot of that is flowing through the bottom line of the cloud results at this point. And very few times, I don't think I can remember ever a $75 billion business growing 30% above and the growth rate going up. So, I think, there are very few things you could, say anything wrong about these results. Pretty spectacular.
So, of course, this earnings season has really been about CapEx. How has Microsoft here really been doing with debt and also just when it comes to AI spend?
So when you look at somebody like a Microsoft, they have the luxury of certain products that are extremely sticky to the enterprise, whether that's Office or Window, that generates a lot of free cash flow. So they will never have a problem, going out to the debt markets and, raising capital for spending. In this particular case, they are extremely judicious about what they're spending on. A year ago, they were talking about what we call as the long tail assets, which is creating data centers and stuff. This quarter, they're talking a lot about shorter duration assets such as GPUs and chips. So sooner or later, they will basically go out and say, you know what, the expansion, we're just going to rent out capacity rather than doing it ourselves. But at this point, I think the backlog is so much that they have to invest so much in CapEx.
All right. Microsoft, it's on autopilot. I get it. I'm assuming it's in my 401k in a million different places. Apple, this is the one that I really want to get smart on, because here's a stock that seemingly was on autopilot for EVs, but now it's down 16% year to date. And I just had a guest, a fund manager, a registered investment advisor, basically just said she doesn't even think about Apple anymore as one of the big tech stocks to own. What does Apple have to do today when they report their earnings and talk to their investors in the street? What do they have to do to maybe reignite this stock?
I think, something that they did in the last worldwide conference, not this year, but the year before, when they talk about that they have a plan to make sure that their products are infused with AI. They did it very well last year, but this year, that hasn't done much, and which is why the stock's gone down. They really have to say that even though they're losing people to Meta in terms of researchers, they will go out and partner with third-party providers, add more AI capabilities to their ecosystem over the next, let's say, 6 to 12 months. Something like that can pacify investor angst about it, but I think when it comes to just AI, people don't. You're right. Don't put them at the same bracket as Microsoft or Amazon or OpenAI.
So if we're to talk here about their decline and seeing them down 16% year to date, of course, we know that expectations for tech stocks are always really high. They have a high bar to hit and meet. Do you think that maybe the market's being a little bit too harsh here when they're just kind of comparing it against a lot of these other mega caps here?
See, it all depends on what your framework is, because when you look at the growth rate of Apple, it's only going to grow 4 or 5%. So even if they beat that by a little bit, let's say 6 or 7, they are not growing in double digits like the rest of the players are. So there is a structural difference that they are a product company, not a services company. So it's not apples and oranges. I mean, it's apples and apples. It's two different business models, frankly.
And is Apple management, are they comfortable with that perception of their company now? Again, it still trades at 28, 20 times earnings, and it's grown about 15%. Its stock price compounded every year over the last 5 years. But are they comfortable maybe being left out to some degree of the current tech discussion, which is AI related?
See, one of the ways they can turn the narrative around and say, listen, we control probably the most important distribution system in the consumer land is through the phone. So they control the phone, and from that point, they control a lot of the apps that are on the on our device. So they have a very strong play in this ecosystem, but they need to figure out how they are giving it to the customers, directly into the ecosystem. Whether it's through Siri, whether it's through search, how are you helping customers become more productive so that the AI is part of the iOS. You don't have to go to an app to get it. And I think that's the comfort that they need to give to investors.
So Apple's biggest segment is the iPhone, as you mentioned here. But of course, we also know about Apple Intelligence that's been floated as well. Where are they in that journey?
So when you look at iPhones, Apple Intelligence is integral to all the products. It's part of the iPad, it's part of the Mac, but most importantly, it's part of the iPhone. When it comes to you could say the evolution of Apple Intelligence, they really need to figure out and now who do they partner with? Do they go with Google? Do they go with Anthropic? Do they go with OpenAI? They already have a partnership with OpenAI, but are they going to go much deeper with that? And I think that is the single biggest, overhang, apart from the payment that they're going to get from Google. So those are the two things I would say that they have to overcome, for people to get more comfortable with the stock.
So it's interesting. I'm looking at the MODL function, the model function, folks. And if you want to see what the street is forecasting for units, prices, the real guts of these earnings models from global Wall Street analysts, you can check out the MODL function. And that's what the pros are going to be looking at today after the close when Apple reports earnings. Anurag, what do you want to see? What's the key data point for you when they report?
So we think that the Apple, results are going to be good because we are going to see a pull forward in demand for iPhones and other products because of the tariff risks. But I think the guidance for next quarter may not be that good, and which is why I'll be, closely watching MODL to see where they are on the iPhone revenue growth rate for next year compared to where consensus is. So that's one number. I want to see what the buybacks are going to be because that's an integral part of the story. If they, for example, accelerate their buyback, it will show confidence to the street, and that's another data point that's on our mind.
All right, very good. Anurag Rana, he's a senior technology analyst. He and Mandeep Singh, they kind of run our tech research effort at Bloomberg Intelligence. I don't know how many analysts we have around the world, but we got them in Asia, North America, and Europe as well. So that's how you have to cover the global technology business because it is a global business, global supply chains, and that's what Bloomberg Intelligence does. Anurag Rana, tech analyst, Bloomberg Intelligence. He's out there in Chicago. And again, folks, type in the symbol Apple Equity, then MODL to get you I'm talking detailed model. They forecast like how many iPhone 15s are going to sell, how many iPhone 14s are going to sell, in incredible detail, and they break it all down for you. And that is the summation. It's a consensus of Wall Street sell-side analysts. They submit their data. We put it up there on the terminal for our terminal users. Hugely valuable. And you can bet the pros are going to be looking at it today. This is
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, let's talk a little bit healthcare here. Eli Lilly, I mean, it's all about like the obesity drugs. Who's the winner? Who's the loser? How big is the market? But there's a lot more to talk about. I don't know. Damien Gardet, he joins us here. He's a healthcare reporter. Eli Lilly, the blockbuster diabetes drug Mounjaro, fell short of expectations that it would do a better job at preventing heart attacks and strokes than its older medicine, Trulicity. Is that a problem, Damien?
It depends on how you look at it, but it does underline, I think, what you mentioned, that the bar is so high for these medicines, both commercially and clinically. So what we learned today, Lilly ran a study comparing Mounjaro, the newer GLP-1 combination medicine, against its older GLP-1 called Trulicity to determine whether it worked as well in preventing heart attacks and strokes. And the good news is the study met its goal. It proved non-inferiority as a scientific term, which is to say it did just about as well as the older drug.